Hello, everybody. So, now let's talk about some challenges to finance ethics. Some of the main challenges in finance ethics is one, conflict of interest. Finance professionals may face conflicts of interest between their own interests and those of their clients. Suppose there is a chartered accountant and the chartered accountant feels that certain shares which he or she buys could be used for themselves, then that itself is what is known as a conflict of interest, because you have entrusted your money with the chartered accountant or with the professional so that they would buy the shares for you. But then when the finance professional thinks that the shares would be better off with that person, then this is basically a conflict of interest, which really should not happen. Next is talking about the incentive structures. Incentive structures in the finance industry can sometimes encourage unethical behavior. Suppose the company offers, let's say, 10% and says that if you bring in, let's say, 1,000 shares, then we will give you 15%. Naturally, this particular financial professional would want you to buy their particular company's share, which in effect is unethical, just because that particular company is giving a little bit more percentage to the to the financial professional or to the broker. That doesn't mean that this sort of unethical behavior has to be encouraged. Next is the complexity of financial products. Some financial products are difficult to understand. So, it is for a normal person, it is very difficult to understand. So, it is the duty of the finance professional to explain what it is and also to explain about the risks involved. Finally, there is what is known as globalization. The globalization of financial markets have created new ethical challenges. Nowadays, you have the different shares in different prices, in dollars, in yen, in yuan, in euro. Each of them fluctuate differently. So, there are time zones which also create ethical challenges. So many things that we need to look into. These all sometimes are challenges to finance ethics. Other ethical dilemmas in finance ethics would be insider trading. Here, sometimes there might be an insider who might tell the financial professional that these companies, this particular share, are going to be sold at a lower rate, so buy more. This is basically insider trading. So, this, though not ethical, this also happens. This is what is known as an ethical dilemma. Sometimes you have some confusion as to what to do. Then also you have market manipulation. That means artificially inflating or deflating the price of a security, of a share, artificially boosting it up or bringing it down. Then sometimes there might be misrepresentation, making false or misleading statements about a financial product. They might show the product as a financially viable product, but in effect it may not be as viable as that. So they're making a false or misleading statement. And finally, there is also an ethical dilemma known as churning. Churning means excessive trading in a client's account to generate commissions. So you do a lot of trading so that more commissions can be got by the financial professional. So these are certain dilemmas that could happen in finance, ethical dilemmas that could happen. One is insider trading, second is market manipulation, third is misrepresentation, and fourth is churning. Thus, finance ethics is essential for maintaining the integrity of the financial system and protecting investors and consumers. Finance professionals have the responsibility to adhere to ethical principles in all of their dealings. So the professionals have to adhere, they have to be sincere to all the ethical principles while dealing with the customers. Thank you. Please do subscribe.